welcome to another roller coaster ride as we get through COVID. Cathy, Sabater, mortgage planner and proud veteran. Yes, I'm wearing my Walt Disney Goofy sweatshirt. Did you know that each of these characters have a certain personality trait? I'm going to challenge you and say, hey, what do you think Goofy is? Because I am a goofy person. So let's get back down to business. So what's happening right now is the foreclosures and forbearance have been extended to June 30th of 2021. So for those buyers who are thinking, hey, we got all this extra inventory, we're going to get all these foreclosures, not going to happen. So when it starts on June 30th, a couple of things may happen, okay? Number one, what is this administration going to do to say, hey, you can keep your house, you got to do X, Y, Z. Or, hey, you got to leave your house and we're going to start the foreclosure procedure. Most of the time, a foreclosure, right, because I'm nationwide, each of the states have different rules and regulations. So once they start the foreclosure procedure, when is it going to start? The fact that they've been in forbearance, that's not supposed to count. So does that mean they have 3, 6, 9, 12 months before they may actually be foreclosed on? Okay. So as far as forbearance is concerned, forbearance is hey, COVID happened. We know you can't make your mortgage payment. You need to do X, Y, Z. What could be some of the options? One, we're going to take what you owe and make it as a second. So therefore, when you refinance or sell your house, you got to pay this. But if you don't have any source of income, how can we allow you to keep your home if you can't make a mortgage payment? I don't know what the rules and regulations are going to be. We'll find out hopefully by May or June, right? So the other thing is inflation. I've been talking about this for the last couple of days, right? So the Feds are starting their meeting on tomorrow, and we'll get the news on Wednesday. Remember when I was talking about that Operation Twist? For them to actually start investing in shorter term bonds, so therefore they can invest in longer term bonds, which is mortgage-backed securities. We'll find out what they're going to do. At this point, interest rates are continuing to decline. So what was 2.875 today is 3.25, 3.375, depending on your particular scenario, okay? Conventional, VA, FHA, how much money you're putting down, your credit score, DTI, all of that is encompassed. But at the end of the day, it all boils down to what's happening in the market, right? A month or so ago, right, rates went to 2.875, depending on where you were, but mostly below 3. Well, we're continuing to move up. I did mention that we do believe that inflation is going to go up to maybe 2.5% by June or July. Hence, we're already seeing the repercussions of that. So what will the Feds do to help maintain interest rates to stay at a particular level? And what number are they going to feel comfortable to actually come in and do something about it? Okay? So let's talk now about one of the other changes, which is second homes and investment property. So FHFA, which is totally different from FHA loans, is the Federal Housing Finance Agency. So right now, they're proposing a change that's going to happen April 1st on second homes and investment homes. So what does that mean? Well, right now, they purchase at least 9% of the loans out there. Well, they're going to change it to 7%. Why? Because we are experiencing such a high level of appreciation and inflation, right? So they're like, hey, if I buy these loans, what's my risk? So I'm going to minimize my risk. And again, once we get the news from the Feds on Wednesday, we'll see what's going to happen in regards to that. Right now, if you can look at mortgage-backed securities, S&P up again, and then the 10-year treasury has hit the 1.6, right? As we mentioned before, that is a level of support that, hey, now that it's hit it, hopefully it doesn't reach higher, because if we reach higher, look at this number here. It's 100.14. The lower this number gets, which means it costs you more money to get that interest rate. Don't get me wrong. You can get a lower interest rate, but the cost of getting it is the concern that we have, okay? So feel free to give me a call, 619-846-2675, and stay safe.